Ladies and gentlemen, welcome to the Tradesman Experience. This is the podcast built by tradesmen for tradesmen. My name is Josh, and this conversation, you're going to want to listen to it twice. The first time, listen to these as you always do on your drive, while you're working. The second time you listen to this conversation, you're going to want a pen and paper. I interview Gina Malvestuto, owner of Green Tree Bookkeeping, and we dive into what a bookkeeper is, what a bookkeeper does, how they can help your business, and why you need one. I met Gina in Denver. She constructed one of the breakout sessions, and I will tell you, by the end of that breakout session, I wanted to shake everybody in there and just be like, I hope you understand this. I hope you understand how they can save your business and help you run your business. And we dive into everything from expenses, CPAs, write-offs, owner draws, corporations. But I'm going to tell you, we have the conversation in a capacity that even I can understand. And if you don't leave this conversation with a page full of notes and an action plan to initiate conversation and what you can do differently with your business, you are missing the point. So here is my interview and my conversation with Gina from Green Tree Bookkeeping. You're one of the most energetic, infectious people I know. And when I got to spend time with you in Denver, one of the things that I got to experience was your breakout session of bookkeeping. And I want to dive into that a little bit, but I think it's important. Give me a little bit of your backstory. You've been doing bookkeeping for a little while. And how did you get there? Just a little bit. How did you get there?
My actual very first bookkeeping gig was I was a senior in high school, and I had been volunteering my time for a nonprofit organization that helped troubled teens. I was actually on their board of directors, and they were like, "We need a bookkeeper," and I'm like, "I can do that. That's like no problem." That was like literally my very, 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 very first bookkeeping gig.
Hmm.
And then I went into like corporate America and did all that kind of stuff and worked as an executive administrative assistant. And while doing that, I would always have like a part-time job bookkeeping. So after getting really tired of corporate America, and I was in the auto business, and back then women moving up in the auto business was not an easy thing, and it was very like difficult to do. I decided that I really enjoyed the bookkeeping, and I thought, okay, I'm going to go work for a CPA firm. And I did. It was the worst job I ever had. I'm not joking. I lasted 6 months and I quit. And the reason I quit is like the top 10%, like his top clients would like, the owner would like throw out the red carpet, and these people would walk in and they would treat everybody in that office like crap. And I was like, what the hell is this? And then the little guys, that made up 80-90% of his business, the owner treated them like crap. And I thought, this is wrong. Like, it's the little guys that make up this world. It's the little guys that support our world. This is who we need to be backing up. And so I quit and started my own bookkeeping business. And that was 4 years ago now.
So you worked for someone for 6 months and then just said, I'm going to do this myself.
Mm-hmm. Yep. Just did it. I'm just like, I had like 2 clients, and I was just like, okay. So I worked 4 part-time jobs and my business.
How long did you do that? The part-time thing. I mean, because I know what it's like building a business.
Well, my son is 18.
Okay.
So up until probably right when I got pregnant, because once I got pregnant, I'm like, I can't do this anymore. and then it was, okay, now I'm a stay-at-home mom. and running a business. I mean,
What?
I always tease and like, not to be mean, but like, I hear people nowadays with kids, and
Please
trust
be
me,
mean. Please be
I
mean.
don't.
I love it.
I think, you know, there are challenges out there. I only have one. So for people
Mhm.
who have more than one, I have no idea how you do it. I'll state that. But like, I literally went in the hospital Saturday night, had my son on Sunday, came home from the hospital on Tuesday, and was working in the office on Friday. Like, that's it. I had my sister came over for a day, and that's it. Like, that was all the
Yeah.
help I got. And I listen to like kids nowadays, like the younger ones. I
Mhm.
can't do this. I need all this help. And like, I'm just like, how do you do this? Like, I don't understand. Like, I owned my own business.
Yeah.
Yeah, it was crazy. It was absolutely crazy.
Uh, I think you and I could do an entire conversation on that. And I'm always careful with my opinion because I am not a father. I've never been. I don't have children, and I'm not going to have children. But I've always wondered that same thing. How much codependency is there from other people for you to be a successful parent? And what you're talking about is just like, just get it done. Just you got to do what you got to do.
Well, okay. I always, oh, this, again, I'm gonna probably sound really mean. I chalk it up to, it's, I'm taking a big liberty here. Like, it's like dog ownership, right? If you have a well-behaved dog or you don't have a well-behaved dog, guess why that is?
Hmm. The
It's the
the
same, it's the same thing.
right.
It's you get out what you put in.
Yeah. It,
That's pretty much the bottom line.
yeah. Well, I mean, YouTube raises more kids than people now, right?
Yeah,
Social media, YouTube, video games, these implanted distractions so the parents can parent less. But
yeah.
that again, that's an outside
A
observation.
total,
Outside
total.
observation.
Yeah.
So going from part-time job, 4 part-time jobs to now you are a business owner, stay-at-home mom. What was growing the business like? And asking a different question, like who did you decide your clients were going to be?
So bookkeepers and CPAs are just really different. Like the CPA, it's like they're the whole pie. They see every aspect of everything. They get to, like, they're not only doing your business tax return, but they're also usually doing your personal. And so they get to see what everything that you're doing in your business and everything that's happening in personal. And they know if you're married, if you're divorced, you own a house, you have a kid in college, did you adopt a kid? They get all the pieces to know what is best for you, for the whole of you. Where a bookkeeper, it's like a slice of the pie. Now, mind you, it's a really good slice of pie. I mean, it's got the whipped
Mhm,
cream and the
mhm.
sprinkles and all that kind of stuff. It's a good slice of pie. And that slice of pie is when we get that information, we get to see all the detail. And I mean detail. There's some things, trust me, I have seen I do not want to see um, ever again. Uh, yeah, not good. Anyway, they just thinking about it makes me go, "Ugh."
Uh-huh.
um and so we get all the details, so we're seeing, like, we know how much you go to McDonald's and go get pizza, and how much you're drinking at the bar down the street. Like, we see all the detail. A CPA does not. A CPA takes what we do and just sees the final numbers. And because a bookkeeper sees the details, getting clients to want to reveal all that to you is not like a go through the yellow pages. Yes, I really dated myself there. It's not like you're going to Google and be like, bookkeeper near me, that I'm going to dump all my personal, information that they can learn all about me. Here you go, Miss Stranger Bookkeeper. I mean, that just doesn't happen. They have to know you. They have to at least have an idea of who you are, or it's a referral.
Mm,
So back then, to answer your question,
mhm.
I did a lot of networking, a lot of networking. And back then, we didn't have Zoom.
Right.
We didn't have the connections we have now on internet. Now it's completely different. I have clients all across the country. I have a couple in Canada. I have one in Italy, and it's because we can do this. We
Mhm.
can Zoom. and see people and talk to people and have meetings this way. So my world completely changed when the Zoom thing, became a
Mhm.
thing, which was really nice. But back then I networked. I would put the baby strap thing on, put the kid in, and go network. I mean, that's what I did.
Yeah. No, I love it because so for me, I tell everybody that there are 6 people that you need in your company behind the scenes, and a bookkeeper is one of those 6 people. I think it's a requirement. For me, it's a requirement for businesses to be successful and to be able to control and systemize their operations. You you talked about the difference between a bookkeeper and a CPA. What does someone need to look for when searching for a bookkeeper?
When they're looking for a bookkeeper, and I guess I'm going to do a shameless plug here. I have a YouTube channel. So if you go to, if you look up Green Tree Bookkeeping on
Mhm.
YouTube, you're going to see me in my hat.
Uh-huh.
And there's a reason I wear a hat. And it's always everyone's homework is why do I wear a hat? Because the reason I wear a hat could probably apply to everybody in business.
Okay.
Um, but I also have a video out there of how to hire a bookkeeper.
Okay.
And the thing is when you hire somebody, you have to know, like, you have to ask questions, but you also have to know the answers and know them and understand the answers. For example, if you're going to hire somebody, one of the questions I ask, and like I literally just hired somebody to work in my office, and these were some of the questions I asked.
Okay.
So I have, you know, a client who's got a painting company and they are going to buy like the ladder and the paint and the brushes. Where does that go? What account does that go on the
Mm.
P&L? What section does that go under? And if it's not
Mhm.
a cost of goods sold
Uh-huh.
answer, that's a problem. Which trust me, I see lots of cost of goods sold in overhead all the time. And I mean, probably 90% of when I get a cost of goods sold or
Yeah.
a chart of accounts, when I get a chart of accounts, that's what I see is like most of the cost of goods sold is in overhead, 90% easily.
Mhm.
Another question I'll ask is if you have a truck payment, where does that payment go? Well, I might say, I bought a truck and I'm going to have loans on it. How do I put the truck on the, books and how do
Mhm.
I take care of the loan? And if they answer, oh, you just take the payment and you put it under auto expense,
Mhm.
that would be a wrong answer. And
Here's oh gosh, so good.
it's
Yes.
just being knowing but you have to know the answer. That's the biggest part. You
Yeah.
have to know the answer. And if your chart of accounts, oh, do you want to hear a good one?
Yes.
This just happened about a year ago, and I about is but this also goes with not only having a good bookkeeper, it's also about having a good CPA. So if
Mhm.
you're talking with a CPA and like he's saying, "Oh yeah, you can do this," and "Oh yeah, you can do that," and you've got little red flags going in the back of your head, run because it's probably not a good CPA. I had a client that they're like, "Yeah, our chart of accounts is messed up. We were wondering if you could give us a consult in just fixing our chart of accounts," which I do all the time. And I was like, "Sure, would love to." And she was wanting a little training too on QuickBooks, which is something I also do. And so I'm like, we're gonna start, and I get her thing, and I'm looking. I just like stop and I go, um, and it was a wife who just started working in her husband's business, and I can tell she was really organized. I see a line here. It's got me a little, and she's like, "What line?" I go, and this is on the profit and loss statement.
Okay.
Credit card payment expense. And I go, "What is credit card payment expense?" And she opens it up, and it's literally every payment made to a credit card, whether it was Home Depot,
Oh
Menards,
my
the
god.
Chase, the Capital One, Office Depot, every single. every single
purchase on that
I
was
mean,
just clumped
no,
together.
just the payment was just put to that. And I went, is this an actual line on your tax return? And sure enough, she looks it up, and yeah, it's there. That was an actual line on her business corporate tax return.
So how many people did how many things wrong in a row for that to happen?
The sad part is the bookkeeper was in the CPA's office that did her books and did it that way.
There,
What?
this is
And
this is so great.
she goes, well, why is that so wrong? And I go, that's not an expense. What did you buy? Did you buy office supplies? Did you buy cost of goods sold? Did you pay for gas? What did you buy? I go, if you ever get audited, they're gonna want to see every single thing, because how do they know you didn't just go to the food store and buy steak and lobster for dinner and then charge it on your credit card and then you paid it, and it's like you and your family didn't go to Disney World for like a week, and
Mhm.
it's just in what?
So this is what I love this because one thing about bookkeeping and numbers and right, numbers are the language of business, and so many people get into business and they don't educate themselves on things like we're talking about. They just go, "Oh, I made this credit card payment." So it's a classification in QuickBooks, and it's just says credit card payment. And I think too often people are paralyzed by fear of what they don't know. And I know from experience that initiating conversations with bookkeepers and CPAs can be intimidating. But what I like about this conversation so far, Gina, is it's exciting. And I think if people understand that and approach these conversations with this high level of exciting curiosity and just say, I don't know. And we're going to dive into cost of goods sold versus overhead because that's a great opportunity for learning. Um, but saying all of that, my question is, what is it that people need to know to be able to initiate their business and hire a bookkeeper? Because you were asking some questions and you said you should already know the answers to these questions. I knew it was going to be cost of goods sold. I knew that it was going to be overhead. I knew it was these classifications. But people don't know what they don't know.
There was a lot in that question there. Okay, where do I start? Um, I think I'm gonna first start. I'm gonna whatever piece I don't answer, well, you'll have to
Okay.
remind me.
Okay.
I think the first thing you asked is the I don't know. And to me, that is like usually the very first thing that has to be addressed is a lot of people hide behind the I don't know, or I don't know my numbers. They hide behind the excuses. I
Mhm.
guess will be the first thing I would say is they have to stop hiding behind the excuses. First and foremost, stop hiding behind the excuses. Um, just you might not like it. I mean, I know a lot of people
Mhm.
don't like numbers. They don't like looking at the numbers. They don't like entering the data of the numbers. And that's why you hire a bookkeeper, so you don't have to. But you still have to know them, and you still have to understand them. So get rid of all your excuses. I think the biggest excuse is that if they look at it and finally understand it, which I think they already do, they just have to admit to it. A lot of times the only person they have to blame is themselves, and they don't want to be
Mhm.
accountable to that, and so that's why the excuse always stays there. So let's just throw that out there, because I really think that's a big piece when it comes to bookkeeping and the accounting and knowing your
Mhm.
numbers. The second piece is for hiring that bookkeeper. Like what I said, like those things should be in cost of goods sold. It's really asking all those questions and making sure you know those answers. Um, and 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 they're going to be part of your business, and so you also want them to be that person that's going to represent you. You can teach I can teach somebody where to put stuff in QuickBooks, but I also need to have them to have the the common sense of it and the personality that is going to work well with people because we do work with people. Like your bookkeeper might answer the phone and talk with clients. You could teach the little mundane stuff. So I'd also put it there, and it's got to be a person that's going to work well with you. Um,
Mm-hmm.
and that's going to be different for everybody. So, I mean, that's all part of hiring a bookkeeper. As far as the next piece goes, I always say, there's little different pieces. Like one is know all the acronyms, like know what AR means, AP means, COA means, P&L, BS, like what
Mm-hmm.
all those little terms mean. Those are chart of accounts, accounts receivable, accounts payable, profit and loss, and a balance sheet. Like those are the main basic ones. There's more out there, but at least understand the basic ones and have an idea of what those mean. I always say for your chart of accounts, if you literally printed your P&L and you printed your balance sheet and you lifted that balance sheet and put it on top of the P&L, every single line you read is your chart of accounts. Your chart of accounts needs to work for you and make sense to you. So I don't have a client that has the same chart of accounts. Everybody has a different chart of accounts. It's what makes sense and what works for their business. I have some people who are very, very, very anal and need to see, kind of the details. And I have other ones that go, just throw it to sales. I don't care. I just need one income account. I just need it to sales. And it's very simple. For the people who want to get detailed, I always say we can always break out detail later, start smaller and then grow into it, because I have literally taken a chart of accounts. Like if I ran the P&L and a balance sheet, I'm not exaggerating, it was 18 pages.
Jesus.
18. Now, and he totally admitted it. I don't know what to do with this. Your profit and loss and your balance sheet, those are tools for you. They're tools
Mm-hmm.
to make decisions in your business. If they're 18 pages long, you're not going to spend the time figuring it all out. You're going to be like, papers are going to be going all over the place. And wait, where's the 17th page? Wait, I got to go look back at that 13th page. You're never going to do it.
Right.
It's not going to happen.
Right.
It'll never happen. You won't look at it. So that tool is like it's a rusty, broken thing in the corner that you're not using, and you might as well just throw away because it's useless. So let's trim it down. I mean, ideally, those two reports should not be longer than 4 pages.
Okay.
Should not be. Now, if you're in business for 25, 30 years, okay, maybe 5 pages. Because, things happen and whatever. Like, it should really not be longer than that. So that's a part of it. All right. Did I answer all your parts of your question? Did I miss any?
You did. No, you did. And I want to keep going on that because I really agree with your point on accountability. They hide behind the excuses, and I think another excuse that comes up is they refuse to not be involved, and people just say, "Well, that's why I have a bookkeeper and that's why I have a CPA." And what they're really telling me is I just don't know what I'm looking at. And they don't know. I love that you did the acronyms because I've actually done that with clients. I just send them a sheet and I'm like, "Here, fill this out. What's an AR? What's a B?" Just all of those things that you're talking about, because you have to be able to speak the language. You don't have to be fluent, but you have to know it enough to have a conversation. And if people would get out of their own way and stop making excuses and be accountable for the simple fact that you own a business, this is your fucking responsibility. Because if you don't do this and you don't know this, you're putting yourself at stake, you're putting the livelihoods of your team at stake, and you are potentially sacrificing your clients because you're refusing to learn the things that you need to learn to properly own and run a business. So I completely agree with the accountability factor. So looking at just breaking this down in an elementary, kind of an elementary sense, They've got to get their ego out of the way, and they just need to sit down with a bookkeeper, with their CPA, and go, I need help. I don't understand what I'm looking at. So just tell me what I need to know,
I
and
love that.
just break that down.
I love that. And you know what I love the most about what you just said? That the owner has to go and do that.
Mm-hmm.
Because in my world, like when I get potential new clients calling me, and they already have like a CPA and a bookkeeper, like one of my first questions is what makes you unhappy with them? What do you think I'm going to be able to provide and give you that you're not getting with them? That's usually one of my very first questions, because that's important to me, because I got to know if we're a good fit. And if you're already bouncing from another CPA and a bookkeeper, or if I hear you've had 2 or 3 of them, that's a big red flag for me that you ain't doing your crap.
Mm-hmm.
Right? So then I'm like, all right, why? And so a lot of the times I hear, well, we were supposed to have like 2 meetings, a year, and we haven't even had one yet. I'm like, okay. Or they're not talking to me. Okay. There's a problem here. There's a big disconnect. And the disconnect is just kind of what you said. It's your business.
Mm-hmm.
Why are you waiting for somebody to come to you? It's your business. You do it. You take care of it. It's your
Yes.
numbers. You're the one paying the people. You're the one sending your money to the government. It's your crap. Take responsibility for it. In my world, I mean, every time we finish a month, we give a client a profit and loss and a balance sheet. Right? In our office, we like have a little poll of like what percent do you think actually open it and look at them? And we're truly like about 20%. 20%, we truly believe only 20% of the clients actually open up and look and review their profit and loss and balance sheet regularly. That is sad.
Oh, it's so sad. But you're saying you think only 1 in 5 actually look at the information
That I send them
in a digestible way where they can now make better or more strategic decisions for the next month.
Yes.
That's terrifying.
It's terrifying. And here's the worst part. It's the other, 80%, they're going, my bookkeeper does, or my CPA doesn't talk to me. Okay. Well, here's the thing. Like, they think I should be one calling them and setting up the appointment.
Mm-hmm.
If only 20% open it and look at it, if I were to stop and make an appointment with every one of my clients, what a waste of my time.
Mm-hmm.
What a waste of their time. What a waste of my time for the clients who really want my time.
How often should you be having that conversation with your bookkeeper?
Quarterly.
Okay.
Quarterly. It may be every other month, depending on the size. It really depends on the size of the business and how much is going on. But every other month to quarterly. If it's a bigger company, maybe even monthly. If it depends on where you are with the business. If like you're kind of coasting by and things are like, but if you got some big plans, monthly. Talk to that bookkeeper about, hey, I got plans. I want to buy a new truck. How can we go about saving it? Or, hey, we've got all this debt. Like, what could be a plan? I just literally had a client of mine. He's a lawyer that called me up. He kind of did this move. Everything's going on. His debt's gone up again. He goes, Gina, I got to get a handle on this. What do you suggest? And so we put a plan in place. And it's so funny, like not even 3 days later, he did something. And I go, excuse me. He goes, oh, crap. Yeah, that's right. I'm not supposed to touch it. I won't. My hand's off. I promise I won't do that again. Just let me know when I got to do something. I'm like, okay, I'll let you know. And I'm like, let's do this for 60 days. And see if this is working. Like there were some, we based it, the decisions were made were based on percentages. So we kind of took what he had, we kind of reworked the percentages. We said, all right, let's do this for 60 days. Let's see if this is working. And then after 60 days, we'll tweak it if we have to. And that's like something that you should be able to do with your bookkeeper. But he reached out to me because he wanted to take control of it because he's being responsible. I can't tell you how many. I mean, some of the debt I see on my clients, and they're just like, yeah, we're just gonna go along. We're gonna go buy another truck.
So that right there brings me to my next question. Let me see how I want to phrase this exactly. How much of the money problems in business are behavior problems?
120%.
uh, so let
I mean,
I
you
I did.
can lead that horse to the water.
It's so true. It's so true. And I knew the answer. And the reason I say that it goes back to the accountability factor and it goes back to the ego factor. It's like the money problems you're having in your business are because of you. It's a behavior problem. It is not a math problem. The math is simple. It's a behavior problem. So talk to me about piercing the corporate veil.
Wait, I'm sorry. I'm sorry.
Sorry.
We'll talk about. Hold that thought.
Okay.
We're
I'm
talking
holding
about
it. Holding it.
that. I just had a thought.
The,
It was right there. You were talking about what we said right before piercing the corporate
yeah,
veil. You said something.
the it's not the math. The math.
Like job costing. I'm just gonna throw that one in.
Yes.
Job costing. Math.
Yes.
To
I
me,
love it.
simple math. My ex-husband, he was a cabinet builder. He started his business when a year or so after we got married.
Okay.
I'm old. We didn't have computers. There was no Excel spreadsheets. You know, I literally would take paper, and when he brought home a job, every job was in a manila folder, and I'd be like, I need all the receipts. How many hours did you work on it? And I literally had like a piece of paper that I wrote. This is what that was what we got from the client. This is all our materials are. How many hours? Okay, you should be paid this. Blah blah blah. Why did we only make $100 on this job? Now, like to me, long time ago in a planet far away, I like that was common sense to me. You do a job. What did you make? Like in the day and age of what we have and how to be able to calculate that is so much easier than what it was back then. I am just dumbfounded when people are like losing money hand over fist. And the first question I'll ask is, do you job cost? Well, as soon as I hear that, well, I know that means no. Yeah. I mean, come on. That's like a no-brainer. It's simple math. This is what I got paid. These were my expenses that went towards that job. This is what I have left over. What's that percent? It's not that hard.
It's not. But people live in the pit, the PIT, the profit in theory. And if you don't job cost, you're operating your entire business living in the pit. And it's astonishing to me because people will also spend money based on the pit. Profit. Well, we made this much money. This is what I bid. So they start spending money and they never job cost. They never track anything on the back end. So you're right. They're losing money. Let's push back the corporate veil thing. I want to go there because I really want to stay on this for a second. Okay. So when they do that, how accurate are the P&Ls?
They're not. I mean,
because there's the classifications are wrong, right? Again, and we're
Well,
talking
okay.
about cost
Well,
of
when you're
goods
talking
sold
about
and overhead.
P&L, so on the P&L, if,
Mm-hmm.
and this is a big if,
Okay.
you put all your numbers in the P&L that are supposed to be there, like and when I say that, like I'm referring to
Mm-hmm.
like your auto payment that should not be in there. Like we're assuming that that's not in there. Your bottom net number is going to be the same,
Okay.
regardless. Okay. But that's just not that's like a piece, that's like looking at 3/4 of a picture. That's not the whole picture. Because before I even look at the balance sheet, when I look at that P&L, I'm going to go, okay, the owner who works in the field, where's his money? And if he's a sole proprietor, and
Mm,
that's not on the P&L. So now I had to kind of do a little adjustment in my pick to make the full picture of where I really at. Or I go, all right, my net, the very bottom is, let's say for the year is $5,000, but the owner, regardless of if he's, sole LLC, whatever he is, and he's taken $20,000 out of the company, but the bottom line only says five, he took $15,000 more than the company even
mm-hmm.
had to offer. The owner just put the company backwards.
Yep.
And that's even before we talk about the auto loan payment, the SBA loan, the line of credit, what you owe on the credit cards. I mean, it's just a big friggin' hole.
Mm-hmm.
And it blows me away that people like, I get you get a loan, you get something, you might not know how to do it, but like that to me is simple math. And you don't even need to in your head have to know what 3 + 2 is. You can just use one of these.
Mm-hmm.
So I don't understand not I really truly don't understand not job costing. That one just blows me away. Absolutely blows. Can you tell I'm just blows me
No,
away. I don't get it. I don't get it. It's stupid.
yeah. Your excitement and fire was one of the reasons that I wanted to have you on this podcast and have this conversation because let's face it, the demographic that we work with, right? You work with trades, I work with trades.
Yep.
You have to punch them in the face with the sharp end of an axe or they don't get it. They just they don't even pay attention to it.
Yep.
So I appreciate your excitement and fire and being fired up because people don't these business owners don't understand that they are killing their business. They are suffocating and not only suffocating, they're stealing from their business
Yep.
by not knowing their numbers.
Yep. And then like if you're gonna go bid another job, if you've done no job costing, how do you even know your estimate is even right if you've never done the homework to know what you should be
Mhm,
estimating it at? I mean, that's really where the freaking job costing comes like starts is your
mhm.
estimate.
How this is a I want to ask
I
this
have to
question.
breathe.
How I love it. Yeah. Bring it down, back to center, Gina. How many let me think about this question for a second. Um, what are some of the ways you see owners accidentally steal from their company? I mean, we talked about like not just knowing your numbers and not job costing, but what are some of the spending habits that owners have that are again accidentally stealing? I'm not talking about malicious intent.
Right. No, 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 no. Um, I think if your chart of accounts is not set up properly and you have I'll just give a couple of examples. Like you have rental equipment, like say your business does, rents a lot of equipment, right? And that is not in your cost of goods sold. Or when you buy those, that ladder and that drill and that hammer, the things that you use every day, and those just go under small equipment, and those are under overhead. When because your chart of accounts are not set up properly, when you're looking at your P&L, there are so many times I've had people go, but Gina, I've got a 52% gross profit. And in their head, and this is like, I have a couple thoughts in my head here. And because they think in their head they've got 52%, I think it justifies them that they can go spend money because they're at 52%. And they didn't account for everything correctly. And then when you do finally fix it, they find out they're at 35%. That to me is one way. The second is they're so, and I'm going to preface of saying, I mean, I know sales is important. So don't think my saying this doesn't mean that I don't think sales is important. It's not only the sales, it's the process of getting your sales. It's the drip factor. It's making sure you have all the processes in place to keep the sales flowing and going. So I get that. I'm not taking away from that. But like when I get a phone call, one of the very first thing a contractor will do will tell me how much they have in sales. And in my head, I go, I'll give a flying frick about what your sales are. It matters not to me of what your sales are, because you could just be a GC that has 5 big, large jobs a year, and it's $1.5 million. Okay. But if you've got $1.1 million in COGS, right? So sales does not mean anything to me as far as knowing your numbers. Yes, it's very, very important. But that gross profit is very important. Your break even is very important. Looking at the bottom net number. Are you at a net profit or a net loss? And people don't ever talk about that. And so just because you think, because even though it's all messed up, your gross profit's at 52%, is that bottom number still net? Is it bottom number negative or positive? That's a part I don't think they get. And if it's just a little bit above, and even though they're taking money, I don't think they realize the correlation of what the net number means and what their balance sheet is talking about, and not realizing what they still have to pay out. And that not knowing that break even number, I think, is a big piece, which I think should be another talk. Because I could spend forever on that one too. That's one. I think their spending habits. You do not need to be buying your guys' lunches you shouldn't be buying your guys' lunches several times a week. You shouldn't think, oh, I have to have something to write off at the end of the year. I'm going to go buy another big truck. You don't need one. Most of the time, you don't need one. Not having a plan to take care of your debt is to me stealing from your family, because the more you don't take care of that debt, you're just paying interest, and that interest is taking from your family.
Well, what ways do you see owners intentionally steal from their company?
Oh, they put things on their books they should never put on their books.
Like what?
Vacations that shouldn't be on there. They think that putting on their family vacation is helping them, and it's not, because usually they think they're expensing it. But first of all, you shouldn't be expensing it, but then you're throwing things on your book that just skews all your numbers anyway. So now if you're putting personal crap in your business, and when you're trying to use that as a tool for your business, you've just skewed all your numbers. And that's not helpful at all. At all.
What about daily habits? Like you talk about lunches for the guys. What about owner lunches or things like that? What works and what doesn't?
Well,
work?
okay, so this is the whole in the corporate world. Just because you own a business doesn't mean you get to write everything in your world off. If you worked at corporate America, you'd get up in the morning and you would eat your own breakfast in your own house with your own money, not the company corporate America money, your money. And then you would drive to work in your car that's paid with your gas from your money. And then you would sit at your desk. Now you're getting paid by corporate America, right? And you would work your 3, 4, 5 hours, and then you would go to lunch. corporate America does not buy your lunch. You get in your car, or unless you brought your little sack lunch and you would eat your lunch in the cafeteria. Corporate America is not paying for it. And at the end of the day, you get in your car that you're paying with your gas, driving all the way to your home, that the business didn't buy any of that gas or reimburse you for any of those mileage, and you have dinner, whether you go out or stay home, all on you, but it's all yours. So how they think their business should pay for any of that is beyond me. Now, if I go to a networking event and I'm going to buy Mr. CPA, I'm going to buy Mr. CPA because I want to get to know him a little better, a glass of wine, that is a business expense. You know, if I'm going to grab a little coffee and we're going to have our every other week meeting and little donut holes for the office to have our meeting once every other week, no problem. You know, once a quarter, hey, we made some goals, let's go celebrate. Absolutely no problem. But all the things, like, you know, you talk about your subcontractors, if you have subcontractors or employees, I don't think they realize how much trouble they can get in for all the things that they try to give them that is income to their employer or subcontractor that they're just expensing, and that they're not telling the government it's income to them. And that's another big problem. Like, you can't just give a guy $100 and expense it. That literally needs to come out of your pocket, because that isn't a business expense. You can't claim it as an expense on your business if you're not claiming it as income to them. You can't go get a bunch of gift gas cards and pass them all out and think that's a business expense, because that's income to them. Technically, it comes out of your pocket. That to me is intentional. Those are intentional things. Or like, it's that time of year, people are giving bonuses and wanting, like, you know, if you decide to like give your bookkeeper a spa day, that's income to that person. It's not a gift. I mean, literally the rule, and it's been this way for years, is you are not allowed to gift anybody more than $25 in a year, or it's considered income. Subcontractors, vendors, potential clients, anybody, not allowed. Cannot be over $25 in a year. And I know it's like, isn't that crazy? It's crazy. Stupid. But that's how they steal. And I think that's how they also might put themselves in trouble. You know, I don't know. A lot of it's their spending habits. Their spending habits are just really, really, really bad.
Well, that brings me back to the piercing the corporate veil. I think it's important for people to know what risk they're really taking when they try to expense these personal habits.
Oh. If and when you get audited, I would say, you know, it's going to be the luck of the draw and who you get. The IRS, I'm sure, as most people know, it's not black and white. There is a lot of gray. And your auditor, you don't know what side of that gray he or she's going to be on.
Some of it's up to their interpretation.
It's their interpretation.
Okay.
Absolutely. And like, if they start looking at like 2 years ago and you went to, you know, Target, they don't want to see Target, and they don't want to see the Target charge card. They want to see the receipt that says, on this day, on April 12th of 2020, you went to Target and bought $146 worth of stuff. What did you buy? They want to see it. And every single item better be business related. Because if it's not, you just made them want to go dig deeper. You gave them reason to keep looking. And they can be extremely nitpicky. Years ago, I had a client who got audited. She was like a recruiter. Like, she helped people like do temp jobs or whatever. And so she would do lots of contracts with the client. like, we're going to do this for this amount of time, blah, 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 right? And she went to like Office Depot and bought herself a pen, like a nicer pen. So when she was doing her contracts, when she left, she would know, I got to take my pen because, this, if
Hmm.
all the pens start looking, she's like, I kept just losing all my pens. So I just got a nicer pen, and knowing that I would take this pen, she got audited. That receipt came up. How much was that pen? Guess how much the pen was. And guess how much the pen was. And guess if it was allowed or not.
$10 for the pen.
Yeah, it was like 15.
Okay. And I'm I'm just going to say no, but
Exactly. It wasn't allowed because it was in excess of what she could get. She could get a whole box of pens for $15. So they did not allow her pen.
hmm,
Like, that's what I mean by it's a luck of the draw what kind of auditor you get, because
yeah.
that was not allowed. And she wrote contracts for her. That was what she did. She did a lot of contracts. So in my world, like, I was dumbfounded by that one, but that's what the auditor said.
Hmm,
So that's what I'm
in
talking
excess.
about, is you
That's
just
interesting.
don't know. And so here's the other piece I think I always tell people too when I start hearing things that it's a part of it is an ethics question. It's all about what your ethics are, what your moral ethics are. It's a code you have with inside yourself. We all
Hmm.
have them. We all know what our limits are or whatever. In my world, I hold a pretty high ethical code. And if you're in your business, you should too. And if you don't, then everybody knows it. Your clients see it, your
Hmm.
employees see it, your subcontractors see it. And so you can't hold others to a higher standard that you're not holding yourself. And I think I see that sometimes a lot too. Of, oh well, this person did da, 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 and I'm looking at your books going, yeah, but look what you do.
Hmm.
Like, where's the standard? Like, if you do things one way, you can't expect others. You can't expect the guy not to steal the screwdriver at the end of the day if he sees what you're doing.
Right.
You know what I'm saying? Like, so
Uh,
I mean, talk
I
about.
I know
So
what you're
that's like
saying.
a really, that's a
1000%.
really, that's a really tricky
Yeah.
thing, and that's stealing. I mean, to me, indirectly, that's kind of stealing from your
Yeah.
family too, because that's not hurting you. That hurts you on a whole different level. That is
Right.
not gonna. You to me, you get what you put out. So
Mhm.
it, it, uh, I'll
This
leave
is
it at
what
that.
this is what I love, and this goes back to the arrogance, right, and the
Yeah,
ego, and the behavior, because it is astonishing. You will get a business owner who will take a personal vacation. They will spend the company's money. I was going to say they will expense it through the company, but they're going to spend the company's money
yeah,
because the narrative is, well, it's my company. I assume all the risk, therefore I am entitled to all the reward. And so they take this personal vacation, and at the same time they want to execute somebody on their team that's padding their time card, for 10 minutes here,
yeah,
15 minutes here. It's like you're you're exemplifying that behavior. That's why that individual
yeah,
is doing it, because you're a poor leader. They don't feel valued. And
yeah,
what they see is you raping the company of reward that they've helped you build. So they feel now, in with the same entitlement that you have, that they're
yeah,
going to spend the company's money for the things that they want.
yep.
Explain what piercing the corporate veil is for those that don't know.
I'm not quite sure what you mean by that, so I'll let you do it.
The Basically, if you have a corporation
Hmm.
and
Oh, I
you,
see what you're
yeah,
talking
yeah,
about now.
you
Okay,
you
okay.
spend the personal money, you lose
Yes,
the protection
yes,
of the
yes, yes. Now
corporation.
yeah, now I know what you're
Yep,
talking about.
yep.
Sorry. I was in the corporate world
No,
thinking a
that's okay.
completely different line.
Yeah. I
Um,
I just think it's important for people to understand the
yes.
risk they're assuming when they start having personal expenses and personal habits funnel through the business.
Yeah. Okay. So then I feel like I'm going to backtrack a little bit and just
Okay.
give like a little bit of an overview. So if you're a sole proprietor, that means you and your business are one and the same. Um, and then you do one personal tax return, and then you have uh, the Schedule C that goes along with it. Even as a sole proprietor, I always tell everybody, keep everything separate. Business is in one bank account, your personal's, in another bank account. You need money to pay for your personal crap, transfer the money over, keep it clean. Always keep it clean, because you never know when you're going to switch. And it's a good habit to start. And then, I mean, if you want somebody like me to do your books, you give me a bank statement that has all a bunch of business and personal in it. I am spending more time trying to decipher what's business and what's
Mm-hmm.
personal than if you just kept it separate, and I would be done with your crap like that. So you're making me, you're paying more for me than I need to pay, and to me, it's not even efficient. So stop doing that. If you're an LLC, you can be an LLC as a sole proprietor, which I kind of just explained, or you can do an
Mm-hmm.
LLC as an S corp, or you're an S corp, you're incorporated. When you become incorporated, the government looks at you as two separate beings.
Mm-hmm.
There is you as a separate, and your business is separate. They're two completely separate things.
Now the business is now its own entity
Yes, its own entity.
as
Exactly.
the law looks at it. Yes.
Exactly. And that goes with like payroll too. So if you are a sole proprietor or an LLC as a sole proprietor, because you're one and the same, you cannot have payroll because you cannot pay yourself. But once you are an LLC as a S corp or become incorporated, you then are able to have payroll because they are two separate entities. The business is paying you. Okay. Now that we've established
Mm-hmm.
the business is its own entity and you are your own entity, you cannot put your personal crap through the business, because once you start doing that, and if you ever get audited, you lose that status. And they're going to say, oh, no, no, no. See, you put this on there and that was personal. Oh, you went and took you went to Petco and bought your dog food. Oh, and then I see where you took him to get his doggy bath. Oh, no. Oh, you took him to the vet here. Yeah, no, that's, but he's my guard's dog. Yeah, your office is in your house. Yeah, ain't flying. Because now you're putting those, oh, I had to look good. I was doing a video. And so I went to the salon to get my hair done for the video. So, that's a business expense. Um, you start doing those things and then they start
Mm-hmm.
getting bigger and bigger. And once an auditor takes one look at that and goes, you know what? You're mixing your business and personal. We're
You're,
pulling away. You are not
yes,
incorporated
it's
anymore.
right. You've lost it.
Everything is one pot. You lost it. So
Yep.
now you lose all those privileges, and it will hurt you so. You
And
don't want that.
you don't, and
Don't do that.
you lose the protection of the corporation
You
from your
absolutely lose the
personal
protection.
assets.
Yep.
Yep.
Yeah, because also by doing that, the reason you incorporate is so if somebody sues the business,
Mm-hmm.
you're protecting yourself, and they can't come after you. Once that veil's gone, people can attack you, and now the
Yep.
the security you built for yourself is absolutely gone.
Yep.
Absolutely. So don't do like why even mess with that? I don't understand. I
So.
always say, well, I don't want to pay taxes. Honestly, I look at it this way: be happy you're paying taxes. That means you're doing something good.
Mm-hmm.
And let's find other avenues of investing it in a retirement fund. Let's look at different avenues to bring that down. But oh my God, pay taxes.
Mm-hmm.
You're going to have to pay them regardless. I'd rather you pay taxes and enjoy your money.
Um, owner owner draw versus personal expense write off.
Owner draw,
Yeah. What?
personal
Um,
expense write
yeah.
off.
Instead of doing the write off, like we're talking about, like trying to funnel these things through the business. You've got the
Okay.
corporation. What? Talk about the
So,
owner draw option.
okay. So if when just FYI, if I
Yeah.
see it that any of that kind of crap in any of the books, it goes against owner's draw because I'm like, owner's draw.
Yeah. Thank you.
All the time, owner's draw. They go to the ATM machine because they want to give Joe Schmo over here $300 in cash. Guess what? Owner's draw.
Mm. Mhm.
Because I can't
Classify that.
it's an ATM withdrawal. It's cash
That's right.
that you took for your personal self. Unless, and there is a big unless, and I have
Okay.
seen it happen. It's absolutely true. If you go somewhere and they were needing cash, you will get a little
Mm.
receipt and it'll say exactly what you bought on it and it will say paid in cash. And
Mhm.
then you give that to me and I go, oh, now I can change the $300 you took to 278.88 and the balance is your draw.
Mhm.
Anyway,
There are so many people listening to this right now, so many business owners that are squirming in their seat because they're trying to figure out how many times they have fucked up in the last 11 and a half months and what the potential repercussions of that can be in the future.
I mean, they're rolling the dice. Will
Yeah,
you get audited? I don't know. Do you want to take that chance? I don't want to.
right.
Um, when you take a draw, it should be an additional. Well, see, now we got to go back. If you're a
Mhm.
sole
Yep,
proprietor,
yep.
right? If you're a sole proprietor, you're not getting a paycheck. So you have to take a draw, and you should take a draw. Excuse me, based on two things. One is it should be if you are working in the field, you should say, okay, I worked 30 hours in the field this week times what would you pay somebody if they had to do your
Mhm.
job? And add that up. And that was what like a portion your draw should be. And then you should take an additional draw for your office work and the sales work and putting invoices out there and following up with Mrs. B and ordering those supplies and all the time you spent doing the other half of the job that requires you. Maybe you're doing your own bookkeeping, all that other time, because you should be being paid for that as well. It's not,
Mhm.
you'd have to pay somebody, what's that? And they'll come up with that. And those should be your draws. And when you take those draws, it goes into your personal bank. And then that's where you go pay for Fido's Beth and
Mhm.
Fido's, Bet Care and whatever. Um, for someone who's incorporated, it's a little bit different. If you're taking payroll, when you're incorporated, you get a little bit of a break. So the government says that if you want, we're going to say
Mhm.
$100,000, you need to take a fair and reasonable paycheck, and then you can take a shareholder distribution. And the shareholder distribution, we will not penalize you for the other like half of Social Security and Medicare. It's like you get like a little waiver. It saves you because when you're a sole proprietor, you have to pay both sides of Social Security and both sides of Medicare, plus the unemployment. You have to pay it all. Just because you don't have payroll, the government still wants all their taxes, so they're going to get it regardless. But being incorporated, you get a little bit of a break. So roughly the idea would be is you want to make $100,000. You would take most CPAs are like, the 50, like you want to do the 50%, but it never, there's something that always comes up and always at something, and I'll explain the something in a second that comes up that makes it off. So I always say take at least 60% in your pay as a payroll, and you're going to do your 40% as a shareholder distribution. Maybe you make it like 65-35. And the reason is because as you go through the year, when it's time to do taxes, you will find that there are going to be other things that don't get put to your bottom line that actually get pulled out and get put to your draw, to your shareholder distribution. One of them, like right now, is meals. I mean, it used to be meals and entertainment. There is no more entertainment. They got rid of that years ago. It's meals. And as of this year, it's only 50%. So if you spent $5,000 in meals this last year, you only get to write off 2,500 of it.
Mhm.
That other 2,500 goes to shareholder distribution. So that's how it's going to bump it up.
Oh,
That's why.
so that 2,500 comes out of the shareholder distribution before you actually get the tangible amount. Like,
Yeah, like on your P&L, there will be an
yes,
adjustment. The
yes,
CPA will make an adjustment at the end of the year for
brilliant.
2,500. It comes out of
Out of the
meals.
okay,
So now your
yeah,
bottom, your net just went up
yeah,
$2,500.
yeah.
Okay. Another one is contributions. Contributions, you will get it, but it shows up on your personal, so it'll flow through
Mm,
into your personal. And there might be other things like they might find some other things. They're like, yeah, this is more like, people think, oh, because I'm the owner and I have my health insurance through the business, every time I go to the doctors, I can write the deductible off to the, yeah, no, the deductible to your insurance is not, every time you go get your annual checkup and you've got to write that $75 check, that is not a business expense, it's a personal expense. So they're going to find things that you've put in your books that shouldn't be there, and they're going to put it to your shareholder distribution. Hence the reason I usually say do the 60/40 or 65
mhm.
35 because then that'll make it more balanced to your. And then if you're an owner too, and you do have health insurance, that also gets thrown through it. The owner's health insurance gets pulled through and goes through the personal. I mean, your health insurance should be like gets put on your W-2.
Gotcha.
So I mean, that's what I'm saying. So
Yeah,
there's a lot
yeah.
of different pieces here. So hence the reason you want to make sure your payroll is not. It's just not 50/50.
Mhm.
That's
Okay,
my point.
gotcha. Yeah. Man, I'm trying to process all of this now.
I know it's a lot. That's why I have my little YouTube channel, because
Yes.
I talk a little bit about these, and each of my videos are like 3 to 6 minutes long, purposely because I know it overwhelms people,
Mhm.
and I give it to them in little chunky, chunky, chunky bites.
Yeah.
Yeah.
No, that's smart. There's a lot to digest in this conversation, especially for people that have never heard some of the terminology that we're using or have never had this conversation or are brand new to business. There's a lot to process here, but it's so important and it's so valuable. I so where I want to go now is I want to talk about the cost of goods sold versus overhead and
Okay.
just some examples that you see people where they're misclassified or they try to classify them differently and then it ultimately gives them a false overhead operating expense, right? Like their break even number. And so if you've got things misclassified. So what are some of the differences and what are the cost of goods sold versus overhead?
Okay. So in cost of goods sold, um, a lot of times where I see the mistakes are subcontractors are not up there. Uh, Subcontractors, equipment rental, small tools, small tools and equipment, repairs for small tools and equipment, um, payroll, labor. They just like chunk everything, under payroll, and
Hmm.
payroll expense is literally one big chunk in overhead. That's usually a really big one I see. Um, Things that are like maybe a little more tricky that people don't think about is like your workers' comp. You should be able to look at your workers' comp policy, and the portion that is for your labor needs to be up in cost of goods sold. If you do have payroll, not only should the labor be up in cost of goods sold, but the tax burden for that
Mm,
labor should also be in cost of goods sold for the business. Most people, it really like I've seen like a P&L where there's like cost of goods sold, shop supplies, product materials, supplies and materials. And they've got like 7 different things for what the one thing is. So, you know, make it easy. Shop, job materials, just call it job materials. And, anything that is job materials that is for a job, put to job materials.
mhm,
Now, some of you might have a shop or might need like, that ladder we talked about or whatever, then maybe instead of it going to job materials, you have shop. shop materials. That would be like a way to break it out if you're wanting to. Remember, we talked about what you want to see or don't want to see. That's another one. Uh, Disposal. Some of the big GCs will have like those disposal dumpsters. They have it under utilities. Yeah, that needs to go to cost of goods sold. So it really depends on the business. Everyone's a little bit different. So you have to think about, this is the job. What do I need to make this job happen? Anything that has to make this job happen is cost of goods sold.
Okay.
And then I also will tell people that if your goal is for a gross profit percent of like say 50%, when you job cost, you need to make sure your job cost is at like your goal is like 52% or 53%. Because when you look at that P&L and you add in that ladder that you didn't really put to a job, or you add in that generator that really didn't go to a job or whatever, but you still need them for the jobs, that will lower that gross profit. So if you really want your P&L gross profit to be 50%, when you job cost, the goal has to be higher.
Okay. We're approaching the end of the year. What's
Yes.
what's some advice that you would give as we to these business owners as we approach the end of the year?
Ooh, I have a whole bunch. Let's see. One, if you have subcontractors, make sure you have their W-9s on file. Don't make a person like me go chasing you all around to get them. Subcontractors, I don't care when you hire them. Oh, I only paid them $200. I don't care. Before you give them, get a W-9. They are not an employee. You do not have to hand them that check until you get that W-9. But he go, here's your check. I have your check right here. Right here. It's right here. I'll be happy to give it to you. Give me that W-9. And make sure, just don't take it and go like this. Look at it. Make sure it's legible, that they filled in all the necessary parts, that they signed it and dated it, that their social security number's in there, and that you can read every single number.
Your enthusiasm tells me you have a lot of experience with that.
I'm going to tell you, last year we literally had a big meeting after January last year. Doing 1099s last year killed us last year because so many of the contractors couldn't bother to get the W-9s. And we talk about that being ethical. For me, it was like an ethical thing. Like, I don't want you getting hurt. I'm trying to protect your ass. I'm doing a CYA. Get the goddamn freaking W-9. Because if you don't and they come back, I don't think people realize what happens. Because
no.
if you paid somebody and you don't have a W-9 on them and you get audited, guess who's responsible for the taxes on it? So if you gave them $20,000, you are now responsible for paying the taxes on the $20,000 on top of all the fines and interest that should have happened that they missed not getting. Oh, they didn't give me one because they told me they were incorporated. Great, get one anyway, because when you get audited and they go, oh yeah, this company's not incorporated, but they told me, yeah, that ain't gonna fly. Then you have the sheet that says, see, they say they're incorporated. Then it's a CYA. Then you don't have to worry about it. But yes, right now, make sure you have W-9s or 10 W-9s to do the 1099s, and update them. Like every year or two, you should update them. People move. People change their names. Get the most current information. Go through your employees. Make sure, if you think anybody's moved, make sure you have a current W-4. Their address is current in the system. Make, getting their W-2s easier so you're not having in March going, I never got my W-2. And then you gotta like go filing. Just make life easier and just do it now.
Yeah.
If you are one of those people who likes to commingle, this is a great time. Get a new bank account, do whatever, do something to split it all out. This is the time that you review your numbers if you know what they are, and you make those decisions. Do I need to buy something to offset my bottom line? Now we're talking, if you're already in the negative, if that bottom line's in the negative, don't even worry about buying anything else. You don't need to be buying anything else. You can't be buying anything else. If what you took out as a draw, distribution, whatever, is higher than your bottom line, don't worry about buying anything else. But people always think about like the big things. So I got to go buy a new truck. But if you have the money, this is the time to look around and go, okay, what needs to get updated?
Yes.
I haven't had a new laptop in 4 years. It might be time to get a new laptop. Like these are the times you buy that new laptop or that new printer. I mean, things that are not overly expensive, but that can whittle it down a little bit, and that you can like pay off by the end of the year. If there's something you can't pay off, don't buy it. Like I'm talking about things like you need a new chair for the office. You need a new rug area thingy, whatever. You need new mats in your car. Like winter's coming and you need new floor mats. Like this would be the time to do it. But the caveat that you're paying it off. It's not sitting as debt. Yep. So that's what I would tell people. And then if you haven't reached out to your CPA, you have a very small window left to do it. November and the middle of October to the middle of December is the best time to talk with a CPA. If that's when you're wanting to do any kind of planning with your CPA, then that is the time to do it. The next time would be like May, June. Those are your two those are your two great times to like really talk with your CPA.
Yeah. No, and what I like about what you're saying is regardless, be strategic. Just be strategic and talk with your bookkeeper, talk with your CPA, and make strategic decisions for the business. And you know what? I used to have an HVAC company. There were times where we had to add to our fleet. We had to increase our vehicles. We had to buy additional tools. But looking back now, I could have done it much more strategically had I been having conversations with the CPA and really planning of, we're going to hire. We need to look at what is our startup cost for this position, kinds of things. So I do like that. It's about being strategic. You can't be strategic if you don't know your numbers. And if you don't know your numbers, you don't need to have a business. Pretty simple.
Pretty simple. And when you say strategic, to me, another piece that like goes in there is savings. Like you should always be saving money. I don't care what it is. Make it like, Money Monday. Like every business should have a checking account and a savings account. And I know some of your smaller ones, because we're smaller, you can't do it. Depends on your state. You can't have a savings account per se, but then open up another checking account and treat it like a savings account.
That's right.
And everything that comes in, like, if you get a $5,000 job, maybe you say, okay, I'm going to take 1% of that, whatever it is, 5%, and it just automatically gets thrown in that savings account, because when it's time to buy that new truck or buy that, you've got like at least you might have a cushion for the down payment,
right? Or
like you've got that like rainy day, oh my God, something just broke and I've got a little bit of something here to cushion that. I'm not saying that you're saving that to take it as a draw, but saving it for the business, because you want to be able to have you want to be your own bank. That would be the idea.
And having 1 to 3 months of operating expenses set back.
Yep.
Because things are going to happen.
Yep. And like if you want to start that like new marketing thing or get that new employee or whatever, at least you got a little cushion there to do it with.
Yep.
Yep.
Yeah. We have to do this again. I mean, we've got so many other things that we can really dive deep into. So I know this is just the first conversation that we're going to have. That being said, Gina, closing thoughts, what do you have to share?
Don't be afraid. Be accountable. You know what? I mean, think about it. We all make mistakes. We all screw up. None of us are perfect. So go ahead and look in the mirror and look at those numbers, take accountability, and be okay with it. I mean, that would be the first step, is just acknowledging it and being accepting of it and going, okay, what do I need to do from here? And don't keep making it everybody else's fault. Just take ownership of it, I think, would be my biggest thing to tell people, is that is what's going to move you forward. You can't move forward. You will stay stuck if you just point the finger at everybody else. I think
Yeah.
moving forward is means about taking responsibility and really looking at yourself and knowing, it's not going to be perfect going forward. There are going to be bumps and bruises and hiccups along the way. But be open to being able to change and accept what can, help you go forward and meeting those obstacles. And the numbers aren't as scary as you think they are. You should be able to learn from them and be able to really grow and take the next step in your business.
People want to learn more from you. Where the YouTube channel, social media, how do people find you?
So the name of my business is Green Tree Bookkeeping. I have a Facebook webpage. I think I'm on Instagram and Twitter. I don't remember. I don't go on those too often.
Uh-huh.
I'm still trying to get my son to teach me. I do have a YouTube channel. It's Green Tree Bookkeeping. You'll see me in my hat. And if you go to my webpage, there is a way to contact me through there. And you can send me a way through there or through Facebook. And I'm usually pretty good. The best way to get the ball rolling though is through an email to me. And that way I can get you on the book, so to speak, to set up a meeting and talk. And usually I will talk with somebody like with no charge, just to kind of get to know you for the first half hour. After that, we kind of just make a plan to what's the next step.
Brilliant. Gina, it's good to see you.
Good to see
Thank you
you.
so much for being on here.
Oh, you're welcome.
Um, I I have more learning to do. I can tell you, I'm walking away from this conversation. I've got so much more to learn, but that's exciting for me. So, guys, go check Gina out. Look at Green Tree Bookkeeping, and I'm going to tell you right now. Just go ahead and anticipate our next conversation. So, Gina, thank you so much.
You think you're welcome. Have yourself a great evening.
You too.
Bye.